Hey everyone, welcome back. I'm fired up to share my top 5 picks for 2025. If you are short on time, here's the list. Take a look at it, and everything is going to be time stamped. However, if you want to know the inside scoop on why I think these are going to be the big winners for 2025 and beyond, again, this is from an investing perspective. Stick around till the end, and I will also reveal two honorable mentions that did not make my top 5, but they are still high conviction plays. Let's dive in. Let's start off with the first pick, NVIDIA, ticker symbol NVDA. They are the market leaders in AI, gaming, and data center tech, powering everything from GeForce GPUs for gamers to NVIDIA Drive platform for autonomous vehicles. Sure, the stock's valuation might be a little steeper for many people's taste, but their dominance in AI, producing 9 out of 10 GPUs in the market which are in high demand, consistent revenue growth in high double digits, and creating cutting-edge ecosystems for the AI revolution. Of course, they are going to be my primary pick for 2025. I'm also very excited about their push into automotive as well as robotics, which also adds another layer of revenue growth for this company. This, along with the gaming expansion, could lead to a huge potential for this stock in the coming years. Overall, NVIDIA's strong track record in tech dominance, AI, GPU, expansion into multiverse, I believe this is a strong pick for long-term growth. And many of the analysts on Wall Street are also agreeing with the fact that NVIDIA is a top pick for 2025. Take a look at the yearly revenue numbers. Currently, this company is generating $113 billion in the year. Cost of revenue is about $27.34 billion. They generate a gross profit of $85.93 billion. This leads to their gross margin of having 75.86%, which is absolutely amazing. And their net profit margin leads to 55.69%. Their debt to equity is only 12.8%, which puts NVIDIA's financial fundamentals as top-notch and A+. Also, if you look at the forward PE ratio of NVIDIA, you're paying 36 times forward PE compared to its competitors like AMD, where you're paying 45, Broadcom, where you're paying 59. So even though they are also in the same market segment, they're also big players. NVIDIA is relatively cheaper as opposed to some of its competitors. Now, one of the main reasons why I have chosen NVIDIA as my top pick of 2025 is because of the upside potential that we have. The average price target from the Wall Street analysts are $172.80, which could lead to an upside of 20.43%. However, if you're interested in knowing how I'm going to play NVIDIA, how I'm going to adding NVIDIA into my portfolio, wait for the full stock breakdown of NVIDIA, where we'll go through in detail which levels I'm eyeing to add the stock, which levels I'm going to take profits at, and my particular price target for NVIDIA in 2025. So, and lastly, why did NVIDIA make my top 5? Well, there are just simple reasons. NVIDIA sits at the forefront of AI revolution. They dominate the GPU market. So 9 out of 10 GPUs in the market are coming from NVIDIA. Yes, the competition is brewing. Yes, the competition is coming. But more often than not, I believe that the market leaders, and especially the first mover advantage, remains intact, at least for the foreseeable future. Of course, that may change in the coming years, but it looks highly unlikely for 2025 and 26 at the current point in time. In addition to just creating GPUs, NVIDIA is moving towards more AI data centers, which they are also building a complete ecosystem. So they are going to produce everything end to end in that ecosystem to support that data center. This goes far beyond from just generating or creating a chip. And that is the reason why NVIDIA's growth looks very promising in the coming years. So apart from NVIDIA being my 2025 picks, I also believe NVIDIA is poised for a long-term growth potential as well. Next up is Tesla, ticker symbol TSLA. Tesla might not be on many people's radar as their pick for 2025, but I will tell you why a little bit later. Well, starting off, Tesla is more than just electric vehicle. They are an entire ecosystem of clean energy. Their automotive segments are expanding from sedans to having a truck like a Cybertruck, along with the sprawling charging stations all across the United States. While their energy segment is also expanding pretty rapidly. Now, one interesting factor is Elon Musk's proximity to to White House. Now this can spark both opportunities and controversies for Tesla in 2025 and beyond. Love it or hate it, the media spotlight is going to remain on Tesla for the foreseeable future. Despite the high valuation and despite the most recent run-up on Tesla stock, I still see a lot of potential for the stock to go up much higher from its current stock price. The yearly revenue from Tesla currently sits at $97.15 billion. The cost of revenue is 79.44. Gross profit is only $17 billion. When you look at the earnings per share, it's $3.97. Their gross margin is pretty low with 18.23, but better than pretty much every car company out there. Their net profit margin is 13.12 and their debt to equity is 10.5. Unfortunately, there is a big debate whether Tesla is a car company, whether Tesla is a tech company, but whenever you're doing an analysis and if you're just looking at their business model of car, then you have to compare it with other car companies. Currently, the forward PE ratio is going to be 136. The peer average is only 18.8 if you compare with the car companies. Unfortunately, this is not the greatest metric out there when you're looking at companies that are creating an entire ecosystem. So it's kind of difficult to do this valuation, and just using a forward PE ratio might not be the best indicator when you are assessing the potential of Tesla. Tesla as a stock particularly has driven the market into two groups, bulls and bears, and the bulls are focusing on an upside potential where they think the stock price is going to go to $528, whereas from the bear standpoint they believe the stock will fall down to 120. So the average consensus is somewhere around $286, which basically leads to a downside of 27.83%. That is the price target for Tesla for 2025. And then you may ask, then why did it make my top 5? Here is the primary reason why Tesla made my top 5 list. Is because Elon Musk is going to have a say, especially in the new Trump administration. And what it is going to do, it is going to help ease the regulation where they'll be able to launch the robotaxi much faster than most people are imagining. If that thesis plays out, Tesla is going to have that edge, and especially the momentum will build with the stock where we could see the highs of 500 even beyond in 2025. But there is a if Tesla is able to launch their robotaxi and they are able to get to that full self-driving without having a physical driver, just like Waymo is doing. And this is the main reason why I have Tesla in my top 5 picks for 2025. Let's talk about Alphabet. Ticker symbol GOOGL or GOOG. Class A Google share or Class C Google share, does not matter. They are the parent of Google, YouTube, and much more. Their core business rakes in cash like no other company. Their financial balance sheet is a powerhouse. They also operate in the cloud segment just like AWS and Azure. They have the biggest video platform, YouTube, which is the second biggest search engine in the world after Google. They are getting into the cybersecurity space. They are getting into the AI space, which again, they are building out a big AI infrastructure as well. Along with that, they are also in the healthcare, which is a long shot bet. Now, they did fumble in the recent years on the innovation front, but again, this is a 900-pound gorilla, which has dominated the search engine space, which also launched the first autonomous vehicle on the road, Waymo, and which is also part of the AI revolution. And they are not behind OpenAI and Anthropic and other leading AI players. When I talked about their massive revenue growth, look at these numbers. The revenue they bring for the year is $339 billion. Their cost of revenue is only $142 billion. Their gross profit is $197 billion. Their earning per share is $7.70. The gross margin is 58.13% with a net profit margin of 27%, and debt to equity ratio is 4.1%. Phenomenal. If you compare the forward PE ratio, you're only paying 21.7 times their earnings as opposed to Meta, which is 24.3, and Pinterest, which is 54.5 in the peer group. From a price target standpoint, the average price target for Google currently on the street is going around $210, which gives you an upside of 8.67%. Now, you may think that the potential for Google from a 2025 standpoint is less than 10%. You could invest the same amount of money in buying S&P 500 and you might get a better deal. However, there's a reason why I put Google as my top 2025 pick is because even though Google has been overshadowed by the other Magnificent Seven, it quietly delivered 37% return in just 2024 to your portfolio. Now, the real kicker is the powerful innovation that AI brings along with their dominance in the search engine. I know that from the market standpoint, OpenAI launched their own search engine. Perplexity is another search engine. The real kicker for Google is the AI dominance in merger with their search dominance. I believe this is going to play a very big role for Google, whether it's in the search engine business, whether it's in the YouTube business. All these different business segments are going to get benefit from the development of AI, the large language model Gemini from Google, along with throw in the expansion of Waymo. Waymo was operating in California and now it is moving to Florida. As they get more successful, more and more markets will open up for Waymo, and that will eventually become a big cash generating business for Google as well. Now, don't forget, Google is also very big into advertising business. They are also a powerhouse along with Meta and Amazon. So that is another business segment that we generally don't talk about because AI has taken over the conversation. But that is another big revenue generation, which will also benefit from the AI revolution. And these are the reasons why Alphabet or Google is going to remain my top 2025 pick. Uber is next on the list. I did a full breakdown on the Uber stock and you can check it out right over here. Uber has come along a long way, especially after pandemic, and bouncing back in the rideshare as a travel alternative and building out their food delivery business, and it is growing worldwide. In addition, Uber's third business segment, which is the freight and logistics, which adds a very interesting angle to Uber's business model. Interestingly, in the rideshare business, especially in Southeast Asia and South Asia, they don't just have cars, they also have three-wheelers and two-wheelers now part of the Uber ride sharing. Those are very favorite modes of transportation in those parts of the world. And I do believe Uber is going to turn into a powerhouse because as the current administration comes in, we may see more M&A happening in the future, which was very difficult for larger companies to acquire other different businesses. I also believe AI is going to also play some role in Uber as well. If they continue to keep boosting their margins, the stock will quietly go up and it will become a big winner for 2025 and beyond. This company is also a powerhouse when it comes to earnings. They bring about 41 or almost $42 billion in the year. Their cost of revenue is around 28.23 billion. So that is a gross profit of 13.7 billion. The earning per share is 2.09 with a gross margin of 32.71. Their net profit margin is 10.49. Their debt to equity is very high, about 70.2. From a forward PE ratio standpoint, Uber, you are paying about 28.8 times compared to its other peer, which is DD Global, is you're paying 27.4. The consensus price target for Uber is around $89.97, which gives you an upside of almost 39%. Now, one of the main reasons why Uber made it to my top 5 list and a conviction play for 2025, because this stock has been beaten down and hasn't really been given the due credit. This company is profitable. According to the Grand View research, the global ride-hailing market could hit a 15% CAGR growth CAGR through 2030. Now, even if Uber gets 10% of that growth, that adds a lot more dollars from a revenue standpoint into the valuation of Uber. Of course, there are going to be risks, local markets, local players pumping up. Another risk to Uber is as Tesla launches its robotaxi, as Waymo starts expanding, this would impact the ride-hailing business of Uber. However, we are underestimating the Uber's moat and the first mover advantage and the current setup of Uber. Uber could take advantage by partnering with Waymo, which they are already a partner, but they could also partner with Tesla and bring all those services as an aggregator to you. So you do not have to have a Waymo app on your phone, a Tesla app on your phone. You could just have an Uber app and Uber could be the aggregator. Again, that is just one business model. Let's not forget M&A could be a possibility on the card. And because of these reasons, I consider Uber to be a long-term play from an investing standpoint, where I do see a long upside potential for Uber as opposed to what it is being traded today. Last on the list is Snowflake, ticker symbol SNOW. They specialize in cloud data warehousing and analytics. And this is an absolute must in today's world for every single enterprise out there. The stock does look expensive from the first glance, but large enterprises, they keep relying on Snowflake. to handle their massive workloads. And this in turn fuels the demand for the stock itself. Now, the last 2 years have been very rough for the entire SaaS businesses because most of the companies, they restricted their IT spending. They consolidated their IT tech stacks, they extended their sales cycle, and that was all due to the fact that the money was expensive. As the interest rate continues to drop in the coming years, we will start to see an increase in the expansion by companies, which means they're going to buy more products, they're going to buy more services, they're going to spend more in the growth of the companies. This is where the SaaS industry in general and Snowflake is going to take advantage and going to improve. Don't forget the AI aspect. Snowflake has launched multiple new products which are going to use AI to help the enterprise. The company brings about $3.4 billion in revenue. Their cost of revenue is about 1.12 billion. Their gross profit is 2.3 billion. Currently, the company is not profitable. Their earning per share is minus 3.42. Their gross margin is 67, which is lower as the gross margin in SaaS business should be around 70 to 80%. That's what's called healthy. The net profit margin, of course, is in negative, minus 33%, and debt to equity is very high of 77.3%. When you look at it from a forward PE standpoint, the stock is not that expensive as opposed to some of its other peers in MongoDB or Cloudflare. The stock is trading at 12.1 times the earnings, which is pretty good. But keep in mind, the company is not profitable. The price target currently is $184.12. That is the consensus analyst estimates, which gives you an upside of 15% from the current price of the stock. The main reason why I put Snowflake in my top 5 is because the stock has been hit hardest because it's part of the SaaS industry. I talked about how companies, they restricted their IT spending, they started consolidating their tech stack. As the market changes, as we have the newer administration coming in, and it's going to be good for the businesses, which means we will see more expansion from the businesses, which will lead to more spending in the SaaS space. And Snowflake is going to benefit from that. That's the first reason. The second reason is as the AI starts to build up more and more, we saw companies like NVDA, AMD, and these infrastructure plays really playing a role. Now is the time for software to take advantage of the AI play. We already saw Palantir as a success story. We saw Salesforce, ticker symbol CRM, launching their Agent Force, which is going to be the new AI driver of growth for the company. And I also believe Snowflake will also excel, especially when it comes to their products and services and taking advantage of AI. And this is the reason why it stays in my 2025 top pick. Before I wrap up, let me give a shout out to 2 more stocks that will be on my watch list and I'll be adding in 2025. Number 1 is going to be Amazon, ticker symbol AMZN. The second one is one of my favorite companies out there, Meta Platforms, ticker symbol META. Let me know in the comments which of these stock picks you agree with, or if you have any other stock picks that you are watching which will be a big winner in 2025, leave it down in the comments. Until next time, happy investing.